Hi, Else here, and I'm continuing with our introduction to management accounting. In this video, we're covering the issue of ethical behavior in accounting. To do that, we must have a common definition of what we mean when we say ethical behavior. So, what is the definition of ethical behavior? If you were studying philosophy, you would recognize that this is actually not an easy question to answer. However, I'm going to define ethical behavior as follows. Ethical behavior is when, in every situation, we choose the action that is right and fair. That seems pretty straightforward, but it's not, because how do we define the words right or fair? Those words are socially constructed. Wait a minute. What does socially constructed mean? It means that if we had lived in a different society and we had different needs and values, then the meaning we have built around concepts would have been different. In contrast to that is a naturally existing object, like a rock. It exists independent of us, and we do not build the concept of a rock, but we build the concept of right and fair, and we build these concepts differently if we are in a different society and we have different needs and values. Let's give a solid example so we better understand what socially constructed means in the lives of Canadians. Women who were deemed to be white, which is, of course, a socially constructed concept. But let's get back to the basic issue. Women who were deemed to be white were not permitted to vote in federal elections in Canada until 1921. Even then, women of color, which included Asian and East Indian women, were not permitted to vote until the late 1940s. Indigenous women, women native to Canada, were not permitted to vote in federal elections until 1960. Now, there are a lot of reasons why men decided that women should not vote, and we're not going to discuss those reasons here. The point I'm making is that women not being permitted to vote was considered right and fair. This was a norm, a common belief that was socially constructed and, for much of history, followed without question. So, if ethical behavior is when, in every situation, we choose the action that is right and fair, what does right and fair mean today and for accountants? Luckily, in Ontario, Canada, accountants known as CPAs, meaning Chartered Professional Accountant, must follow the CPA Code of Professional Conduct. Even CPA candidates, individuals who are studying to become CPAs, have a student code of conduct which they are required to follow. And we're going to use this code to define what is right and fair. The code has 5 fundamental principles of conduct. 1. Professional behavior. 2. Integrity and due care. 3. Objectivity. 4. Professional competence. 5. Confidentiality. Let's cover each one individually, and we'll start off with professional behavior. This means that, at all times, we will act in such a way as to protect the reputation of our profession and protect the interests of the public. It also requires us to pursue a reputation of professional excellence, meaning we strive to be at our best at all times. This fundamental principle specifically requires that accountants emphasize the importance of ethical behavior. Those words, ethical behavior, are a part of the CPA Code of Professional Conduct. The remaining 4 fundamental principles tell us exactly how we can be sure we do exactly that. Let's move on to 2. Integrity and due care. We'll start with the concept of integrity. The word integrity in the Webster's Dictionary means adherence to a code of moral values, incorruptibility. It's easier to break that down into the following. A. Honesty. B. Straightforward. And C. Fair. And there's that word fair again, but we'll deal with that later. Let's expand on each of these individually. A. Honesty. Everyone thinks this one is easy. Always tell the truth. But you've all heard of the concept of a little white lie. This is a lie about something small and unimportant that we tell in order to avoid hurting someone else. For example, we might tell a friend that they look great in their new sweater, even when we think it's ugly. The friend's already bought the sweater and, worse, is wearing it. So why hurt their feelings by telling them the truth? There are a number of problems with telling little white lies. First, often the person we're protecting is actually ourselves. Like when we say, "I've already finished that," to our supervisor, when actually we're almost finished. The second problem is that sometimes our definition of small and unimportant might not be the same as the other person's definition of small and unimportant. They might think that this issue is actually pretty large. Last is something my mother always said about little white lies. It's a slippery slope, and one little white lie can quickly lead to much larger lies. Better to keep it simple. Honesty means we never lie. And remember that, as accountants, our first requirement is professional behavior, which means protecting both the reputation of the profession and the interests of the public. Therefore, as an accountant, we must always be honest. Next is B, straightforward. This means we will communicate the information we have in a way that is easy for others to understand. It means that we recognize our audience, who they are, and what level of knowledge they have before we communicate information. If our audience are not accountants, then we will make sure we avoid accounting jargon and will explain concepts in a way that best helps them, the audience, to understand. We'll speak frankly, meaning in an honest and direct way. Last, we're back to C, fair. So, what does fair mean? It means without cheating or trying to achieve an unjust advantage. It means we will be free of self-interest, bias, or favoritism. So, fair means accountants will never cheat anyone else. They will always act impartially, without bias, and they will protect the rights of others. How about an example? Consider the owner of a business who wants to overstate their profits so that they can get a loan from the bank. The accountant is representing both the company's interests in getting the loan and the interests of the bank, who will be loaning the company the money on the basis of the information provided by the accountant. The accountant is also representing their own interests in keeping their job at the company. If the accountant allows the overstatement of the profit, they would be cheating, showing a biased view of the company to the bank, and they would be protecting their own self-interest. They would not be protecting the rights of the bank. So fair means no cheating, no bias, and no self-interest. What about due care? This means the accountant will always do their work carefully, thoroughly, and on a timely basis. It assumes that the accountant is up to date with regards to accounting standards. It also acknowledges that accountants will take care when providing information to others so as to ensure that the work is done right. So, let's reiterate. Integrity and due care means that accountants will be honest, straightforward, no cheating, no bias, no self-interest, careful, thorough, and timely. And it means we will do that all the time, in every interaction between ourselves and our employer, employees, clients, and the general public. As an accountant, I think this is pretty straightforward. We'll continue our exploration of ethical behavior and the 5 fundamental principles of conduct in our next video.